Welcome to this week's weekly technical analysis. My name is Joel Chandran, lecturer / investment coach here at Train to Invest. We'll be looking at the TSX, the Focus 5, gold, silver, oil, and a few related ETFs for the week of December 9th to 13th. 3-year weekly chart of the Toronto Stock Exchange. As you can see on the price bar on the far right-hand side of your screen, not a great week for the TSX overall. Closed lower than we opened. Closed 1, 2, 3 weeks of lower lows. Not a good sign. As you can see, the MACD has started to head down, potentially heading towards an inflection point. So not a great sign. We had a bit of issues with the bond tapering and the U.S. budget deal being put together. So that has impacted the market. As people fear the stimulus will be pulled out. But again, overall, not great. As you can see, RSI and stochastic, both momentum indicators showing that momentum is pulling away from the index. So strength, while above, the MACD is above the signal line, is positive. Momentum is pulling away. I would expect that since we almost touched 13,000, but we will see some more positive growth next week. Potentially, the next 2 weeks will be very moderate as we head into the end of the year. 6-month daily chart. Monday and Tuesday were good. Wednesday, we saw the precipitous decline. Thursday was a low point of the week. And Friday, we closed higher than Thursday. The TSX itself closed up $11.31 to $13,125.70. So we closed up on Friday, which is good. Some momentum is coming back. As you can see, the stochastic, we do have a cross, which is a good sign for momentum. RSI is starting to turn around, so that's a good sign for momentum as well. MACD is negative, and the histogram bars are continuing to grow on the negative side. So not the great sign in terms of strength, but momentum is slowly turning around, which is important after that big drop on Wednesday. The composites, the index versus the indices, as you can note, still consumer discretionary on top, financials on top, consumer staples, and energy. Our main four continue to outperform the index, and again, we'll focus on those. Here is the 6-month daily chart of the consumer discretionary index. As you can see, momentum is back with the index. Wednesday, of course, was down. Thursday, Friday moved higher. So we see that momentum is flowing back in after the overall market decline. Of the stocks which are doing better than the index, Thomson Reuters is just below, Tim Hortons is just below, and Shaw is just below. For the outperformers, you have Magna in this turquoisey green color here. The blue is Canadian Tire. The red is Gildan Athletic Wear. So where we have a couple which are above, we have Gildan, which is really separating itself from the rest of the index. But I mean, overall, over the last 6 months, if you had invested in any one of these, you would have done quite well. Consumer staples, not the same bounce as the discretionary, but Friday did close higher, so momentum is starting to turn around. And this could be good for the upcoming week as we see the turnaround continue. The index is in black here. And we have Allen Couche-Tard in the blue and Shoppers Drug Mart in the purple, both outperforming the index. Below, we have Saputo, which is working on buying some company in Australia. Weston in the brown. Metro in the green, and the red is Loblaws. Cap Energy Index, again, Wednesday was bad. Thursday, Friday, a bit of a rebound. So momentum is coming back into these main indices as we move forward. In the black, we have the index at 8.39% growth. Huskies in that orange. The brown is Suncor, the purple is IMO, and the blue is CNQ. You can see here in the green, Encana dropped quite a bit. So did Cenovus, and Talisman as well is still below. But the big drop here was in Encana. This is the price of oil over the last 6 months. It's been up 69 cents or 0.72%. So not great growth, especially compared to where it was in September. Overall, for the week, you can see on the far right-hand side, it is declining. So that is not what we want to see, but it's still above 95, which is good. We're going to see a turnaround and head higher. Enbridge, 3-year weekly chart. Closed higher than opened marginally. MACD and the MACD histogram both declining. Not a great sign. But it looks like we may begin to see another turnaround to the upside as last week's low is lower than this week's. As you can see here, low, 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 turnaround. So this may be a turnaround point. Next week we may see some more growth towards 45, which would be great for some 1% gains. RSI and stochastic are both blue. Stochastic is an inflection point, and it could turn higher, which we're hoping, instead of touching and heading down. Here we have the 6-month daily chart. It tried 1, 2, 3 days to break through 44. It closed higher on Friday than Thursday's close of a great whopping 5 cents to 43.84. So not a ton of movement this week. MACD and MACD histogram are flat. RSI is flat, but stochastic is showing growth. So that's a good sign. Hopefully we can see more momentum push into Enbridge, break above 44 and head towards 46 and 47. Remember, excuse me, there's still the Line 9 and the Northern Gateway deals, which are causing some hesitancy in the Enbridge stock. So if you're holding at under 44, you're in a good place. You have to wait a couple weeks to see some growth, but at least it's not declining. Imperial Oil, not a great week. Closed lower than we opened. Another week of low lows. MACD is flat. RSI is heading down. Stochastic's heading down. So if you're in, you may see some more decline, especially as oil prices continue to weaken. If you're looking to get into IMO, I would say hold on until there is a turnaround. We may see this week a breakthrough 45 if oil prices continue to worsen. Here we have the 6-month daily chart. 1, 2, 3, 4, pretty much 5 days of decline. IMO closed unchanged on Friday, which means Friday's close and Thursday's close were exactly the same at $45.29. MACD is a crossover, so that's clearly a sell signal to the downside. Clearly a sell signal, so we shouldn't be getting in right about now. RSI flat. Stochastic is declining and heading down. You may see it have an inflection point at 40, but next week I would expect it to continue to head down if oil continues to weaken. So it's been really impacted by the price of oil significantly. You can see that it's kind of almost touched 44, 47, came back down, 47. So we could be heading back down towards here sometime during next week. Suncor, higher than last week's close, but lower than what it opened at this week, again, due to declining oil prices. MACD, we have a crossover down back over here, so that's a sell signal. RSI is flat, and stochastic has reached the low point and started to turn around, but with oil prices continuing to be weak, we could have an issue with it breaking through 35. I would expect it to test 35 again this week if oil prices continue their trend. Otherwise, it could be a turnaround week. So really, we have to watch what the price of oil is doing. 6-month daily chart, not great. Suncor closed down 20 cents to $35.80, lower than it opened on Friday. MACD is bad. RSI is bad. Stochastic, while green, is still heading down. So again, we could test 35 this coming week before turning around. But as you can see, the last couple of weeks, we've tested 36, gone up to 38, come back down 36, gone up to 38, came back down, but broke through 36. So this could be a change in the trend. We could go back down to 35, potentially even down to 34 with continued weakened oil prices. Here is the financial index. Again, momentum cross here, great sign. RSI is flat. MACD is negative. Could we just be coming back down and testing these levels before turning back up? Not 100% sure. A lot of the decline had to do with the interest rates in the U.S. potentially being moved, with the bond stimulus program being potentially tapered or ended. So there's a lot of fear in the markets in terms of what would happen if the U.S. pulls out the economic stimulus. In terms of the index versus its constituents, CIBC is still above, National Bank is still above, Sun Life Financial is still above, and Manulife Financial is still above. BMO, Royal Bank, BNS, and Laurentian Bank are all down as well. TD is above the index, but just barely. So the major banks reported pretty much good earnings last couple weeks. Now looking forward, we could see things start to tighten as the stimulus spending evaporates slowly over time. Royal Bank, 3-year weekly chart, not a great week to week. A little better than last week, but still not good. We have a MACD inflection point. So if it crosses under, that's a sell signal. RSI and stochastic are both saying stay away. 6-month daily chart, Monday to Friday, we just saw poor depreciation. Compared to Thursday, Royal Bank closed up 11 cents to 68.23. MACD saying stay away. RSI is flat. Stochastic is an inflection point, and it could be hitting higher. We could just see it base at 68 and turn up. But looking at the chart, I expect that to occur. That 68 is just support, and it'll move higher with the fear out of the way of the stimulus spending being gone. So I expect it to turn higher next week, potentially up to 69, but we'll see. TD, 3-year weekly chart, same kind of deal as Royal Bank. Closed under 95, not so good. MACD is at an inflection point. RSI and stochastic are both saying stay away. On Friday, we closed lower than we opened on Monday. 6-month daily chart, same sort of declining trend. TD closed down 16 cents on Friday to $94.65. Again, are expected to hit 94 and bounce back up. Stochastic is starting to turn around, even though it's red. RSI is flat. MACD is saying stay away. But once this starts to turn around, which I expect it to once it hits 94, it'll pop back up quite steadily because 94 seems to be a good price to for the stock. So the last couple times it hit 94, 94 went up, came back down 94, jumped up. We could be seeing a lot of range between 94 and 92 over the coming weeks. Gold, disappointing as usual, $152.80 down, or almost 11% down over the last 6 months. A bit of a rebound here on the Friday, but again, overall market movement is down. CGL was up 10 cents to $10.97, our gold bullion ETF. MACD is green, RSI is green. Stochastic is getting there. It's on its way to an inflection point, but unless gold prices continue to its appreciation, I would say, just getting in at 11 is great, or just under 11. But remember, it's more of a long-term play at this point because gold prices are still relatively weak. HGU, our Global Bull Plus ETF. MACD is green, barely. RSI is flat. Stochastic, we have a cross down, even though HGU was unchanged from Thursday to Friday at $6.59, the closes at least. So we saw a bit of appreciation on Thursday to Friday, but again, not really going anywhere in terms of growth. Once gold prices start to appreciate significantly, you will see more return on this ETF. HGD, Tuesday, Wednesday, Thursday were great. Friday was not so great as it closed down a bit as gold prices appreciated. So HGD closed down 4 cents to $22.75. Everything's blue. If gold prices continue to decline, we'll see this go up. So I would expect next week to see a bit of a decline in this ETF as gold prices appreciate, maybe Monday, Tuesday, and then come back down on Wednesday, Thursday, Friday. But that is just my guess and my assumption. We have had trouble breaking through 25 for this ETF. I would expect it to come back down to 20 before turning around once more. Silver, down $2.37 over the last 6 months, or almost 11%. Same issue with gold. It's been very volatile over the last couple of weeks, especially since we've had that huge downturn beginning of middle of October to now. We've had a significant downturn, but again, until the stimulus setting is all figured out, it will continue to be volatile. SVR, Silver Bullion ETF, not a lot of movement on an intraday basis. Monday was okay. Tuesday, Wednesday, we saw the biggest growth. Thursday, Friday, we came back down to earth. SVR closed up 9 cents to $11.38. MACD is green, RSI is green. Stochastic is red but heading higher. Again, this is showing the reflection of Friday's growth in silver pricing. But once silver prices continue to stay in their sideways trend, so too will this ETF. We couldn't break through 12. We didn't break under 11. So the range, I would say, is between 11 and 12. And that's where it's going to stay for now. If you get in now, you're not going to make a quick buck anytime soon. It's more of an appreciation or inflation hedge. HZU, Silver Bull Plus ETF. Good signs. It was up 12 cents to $7.05 on Friday. Again, showing the rising silver pricing. MACD is good, RSI is good, and Stochastic is coming up. Just like the same in the gold ETFs as well. And finally, HZD, down 17 cents to $8.28. All the signs are saying stay away. But again, silver pricing won't be shooting up or shooting down anytime soon. It will be staying in its sideways trend. It might go up and then come back down to support, just like gold, simply because of the issues with the U.S. budget, stimulus spending, and people use it as a hedge against inflation. So if you're looking to make 1%, I would stay away from these ETFs. Look at the equities. If you're looking to put a portion of your money just to sit and not lose anything, these ETFs may be for you. That is it for us this week. Have a great holiday so far. If you're taking a couple weeks early, good for you. There's my email. Questions, concerns, comments, please let me know. website. Check us out. We'll be having a new set of classes in the new year. So if you want to get in on those or want to get a little more information, email me or check out the website and get in contact with us. That is it for us, Preparing to Invest. My name is Joel Chandran. Talk to you next week. Bye now.
The organizer has